Good afternoon, everyone. So Saturday afternoon, and we are supposed to learn the most important topic, GST 9 and 9C. And most probably all of us for next 1 month are going to work on this only. GST annual returns is the topic that we are going to discuss today. And we start with this very important slide that says that once a student is always a student. So with GST and the way it is changing, it applies to all of us. Even though a lot of students always feel कि बस यार final CA हो जाए, so it is done. Then we might not require to study so much. But I tell you that is just the beginning. And even after CA finals, the journey to learn and improvise in whichever field you all are is always going to be there. You all have to keep learning and updating yourselves in whatever field or subfield that you are going to choose. So yes, always keep learning so that we can keep growing. Then we discuss about the current GST scenario. So here we can see a very different image, as in some of us would even think कि ये क्यों है इधर? Why is this slide? So this slide is a big boss house, which is where we all are stuck in compliances as consultants, as the articles. So here जैसे बिग बॉस के घर में टास्क देते हैं कि आज ये करना है, we have to do this, we have to do that today. So similarly, we are given task in GST compliances through various circulars, notifications, advisory. So advisory says that it comes in the morning, and again the same advisory is changed in the evening. And we have seen many such instances in the past. So yes, it is just like a big boss house. And when we see GST compliances, no video than this. Next slide, next video can guide us. So here, it's visible, right? Visible. Yeah. So here, Tom is us, where we are always trying to chase the compliances, and Jerry is the compliances which always keeps on running from us. So however we try कि आज का due date हो गया, so there is always some other due date which comes up and we keep on chasing it. So tried adding a bit of humor for all of us because the session is going to be little more technical ahead. Yeah. And now we start with few basics for GST and 9 and 9C. Okay, so before that, we can hear from you all what you all feel is GST and 9 and 9C. Yeah. Can you tell me from your, whoever is sitting in front of me, can we have some answers from you all? What do you all feel GST and 9 and 9C is? So before that, do you all of you all are looking into GST and GST related compliances? Yes? No. So have you all filed any GST returns earlier in the past? Some of you all. So can we do it with a show of hands, please? So how many of you all have filed GST returns? It should not be 9 and 9C, but general GST returns. Yes. Okay, so quite a few of them, and others are still in the process of learning and understanding. Great. Yeah. And have you all ever did GST and 9 and 9C in the past? Attended any sessions? Okay, so according to you all, what is GST and 9 and 9C? I know it is a very big question for you all when you all have not done it in the past, but before the session, what do you all feel it should be? Just as a rough understanding, if we can get from you all. What is GST and 9? So ideally, I think you all would be assigned certain GST and 9 and 9C to be done, right? Yeah. So what is it? Can anybody tell me? Just a liner also is okay with me. Okay. Anyone else? Yeah. So should I start discussing that? So GSTR 9 Form GSTR 9 is an annual return which consolidates and summarizes the information furnished in our monthly and quarterly returns. Whatever we file every month or quarterly through GSTR 1 and 3B is accumulated, and we have to reconcile those figures in our GSTR 9. And that is relating to a particular financial year. So currently our financial year in picture is going to be 23-24 for GSTR 9, and for GSTR 9C as well. And GSTR 9C is it reconciles the data declared in the annual return and audited financial statements. So the basic difference between GSTR 9 and 9C is that GSTR 9 is based on the returns that we have filed earlier in the whole year for that particular financial year, and 9C in turn compares the audited financial statements, that is our books, with the figures declared in 9. So it is a summation of all the returns that we have filed, which is accumulated in GSTR 9, and that summation is being reconciled with the audited financial statements in GSTR 9C. So assuming that all of us here are here to learn, I am going a little slow. If you all feel that we can, take it little more faster, then please let me know. Okay. So now you said it is mandatory to file GST 9. We'll come to that as well. But the other question arises is, do if all the registered people have to file GSTR 9 and 9C? So ideally, yes, except for these certain parties, which includes ISD registered taxpayers, TDS taxpayers, TCS, casual taxable person, non-resident taxable person, and few government-related departments, which are listed on the right hand of the slide. You all can just go through it, and then we can move on to the next slide. So apart from these certain entities or these certain registered people, other people are required to file GSTR 9 and 9C. So these are the exceptions. The parties listed here are going to be exceptions. Yeah. So can I shift to the next slide? Yeah. Now, as she said that it is a mandatory compliance, but it is not mandatory for everyone. There has been a criteria set, except for the parties that we discussed earlier in the earlier slide. If the aggregate annual turnover crosses 2 CR, for a registered taxable person, then that taxable person has to be filing GSTR 9. And this aggregate turnover is considered as a total group wise. So if there are 10 registrations in a particular entity, state-wise registrations, or maybe there can be 2 registrations even in one state, but for all the registrations, aggregate turnover will be considered as one only. So it is considered as an entity wise and not the registration wise. So do you want me to explain entity wise and the group wise, or I mean, we are aware of that concept? I can move forward, right? Yes. So as we discussed, above 2 crores, it is compulsory. More than 2 crores, if the aggregate turnover crosses 2 crore for the financial year 23-24, then we are supposed to file GSTR 9 for the same. Then the filing requirement for aggregate turnover for 9C is 5 crores, and this 5 crores again is aggregate turnover for the whole group, for the whole entity, and not just registration wise. So if the entity crosses 5 crores, then all the registrations of that particular entity are required to file GSTR 9 and 9C. Now the basic, I'll be again going back to the earlier slide. Now if you can see here, I have mentioned a notification. So what is the relevance of this notification? We might have a common notion that since from the start the limit has been set as 2 crores, which was for 9. So earlier when the law was introduced, the CGST Act, or the all the acts together, in 2017, it stated that all the registered taxpayers have to file GSTR 9. So there was no exemption as such. When this exemption has been inserted every year through this notification. So if we go to the Bare Act and when we see the Bare Act, it will still say that every registered person is supposed to be filing GSTR 9. And for 9C, the turnover criteria is mentioned there in the Act. But for 9, with the help of this notifications, every year this exemption is inserted. So for 23-24, through this notification, this criteria has come up that it is going to be 2 CRSs. Yeah.
Getting more chairs for you.
So now we discuss few key facts about Form GSTR 9. So this is very basic. Like when we start filing GSTR 9, so there are few questions that arises, or even our clients ask us few questions relating to the same. Yeah. So few of those questions we have tried to list down here and discuss the same. So if the taxpayer had forgotten to declare any liability in financial year, then the same can be declared. So yeah, I will just take a pause for a minute so everyone can settle down here. So, for all those who have joined us now, we were discussing that the turnover criteria for filing of GSTR 9 is 2 crores and for GSTR 9C is 5 crores. Okay, so we are now trying to discuss here that certain factors which are directly related. So these are facts which questions either it comes to us when we are working on GSTR 9 and 9C. So it is not directly related to the working, but the awareness of it would help us in filing of GSTR 9 and 9C or data preparation for the same. So if we have forgotten to declare any income or outward supplies in our GSTR 1 and 3B, either 1 or 3B or can be both places, then the same can be declared through GSTR 9. So, for example, if we say that we had disclosed our income was 6 crores earlier, and we forgot to declare certain income of 10 lakhs rupees, an invoice of 10 lakhs rupees was missed to be filed even in 1 and 3B, then the same can be declared here in GSTR 9. The taxes can be paid with the help of Form DRC 03, and it has to be paid through our electronic cash ledger. But when it comes to ITC, if we forget to take any ITC before the 30th of November in our October returns, if we fail to take that, then GSTR 9 does not have that provision to claim that excess credit that we have to claim. We were supposed to claim. So claiming of credit is purely and purely to GSTR 3B. It is only that we reconcile those figures in GSTR 9 and we cannot claim anything additionally pertaining to ITC, input tax credit, in GSTR 9. Okay, and as said, so the credit ledger also does not get impacted because if we are not able to show anything in addition to the credits that we have shown earlier, the credit ledger might not get impacted any which ways. And one point which comes to my mind, or even maybe might come to your mind, that okay, we cannot show the excess ITC, but would reversals be shown here? Yes, the reversals will be shown here. If there is some excess credit on reconciliations, we find that okay, this was the credit which was not supposed to be taken and we had claimed it in GSTR 3B earlier, then we have to reverse it here and we can claim we will have to pay that reversal amount as well through the DRC 03 along with the interest respecting to the same. Yeah. So I think the points on this slide are clear, right? We can move forward with the next slide, right? Okay, yeah. So the annual return. Now, these are very, very basic questions that we have tried to cover here because a lot of times it happens that we will complete the whole GSTR 9 and 9C. We would have submitted also for a lot of our clients. We would have filed a lot of GSTR 9 9C. But when these kind of certain questions come up, we again try to go back and ponder whether was it to be done, not done, sort of a thing. Yeah, so GSTR 9 is to be filed even if the registration is cancelled during that particular year. So in between 23-24, financial year 23-24, if somebody's registration is cancelled, But before the cancellation, if his registration, if his aggregate turnover crossed 2 crores or 5 crores, then he will have to file GST 9 and 9C as to whatever is applicable to him. And similarly, for new registrations, so I think it is very clear that if the turnover criteria is reached, then we have to file GSTR 9. And GSTR 9 is to be filed GST invoice. So as we discussed that entity wise, the registration wise, and the whole group. So aggregate turnover will be based on the whole group, the whole entity, one company, say XYZ company, having 10 different registrations all over the country, then 10 GSTR 9 and 9C would be filed, and the company will be same. Though the company will be same, but we will have to file 10 different GSTR 9 and 9C for each of the registered party. Distinct person is what we call in GST. Yeah. And majority of the changes now, the form keeps on being updated. There have been various press releases, notifications, which has given us a lot of clarification as to how we are supposed to file GST 9 and 9C. Still there being a lot of ambiguity, but a lot of clarification over the period of this. Since 2017 we have got it in 7 years. So for current year 23-24, major changes have been notified through notification 12/2024. Now what we would have is, we would have the last year's data with us, and maybe our senior would tell ke, you see the last year data, see what is the changes, and try updating the for the 23-24. So now where do we find that what changes had happened? So if it is in case of income tax, it is very easier for us to find, because it is only through finance act or through the budget that the amendments do come. But in case of GST, this is the notification which will guide us to the amendments that have been made or the changes that have been brought in the form GSTR 9 and 9C. So we can refer to that, and we can get we have the slides in further to describe what changes have been made in the form in the current year. But we can even see the notification for further details. And yeah, so the due date, as we are all aware, is 31st December. But I think for a lot of our corporate clients, they always try and force us to finish it before 25th, as they all go on leave. There are a lot of blocked leaves for a lot of corporates in December, and we are supposed to do it very quickly. And for us this year, the form also came in very late. The form, the utility made available to us also came very late. It just came to us in the November, I think first week of November, the form was made available to us. Yeah, so the window is short, and maybe the type of reconciliations that we are supposed to do, many of us would have finished it, but somewhere, some places, it might still be in the work in progress. Yes. Yeah, so this is, the clock is ticking. And if we try and if we have a clarity, so basically I think with GSTR 9 and 9C, what I feel is that it is easy to fill the form. I mean, I don't know, you all can correct me if I'm wrong, but it is difficult to take the stance or the assumptions that we make as to which figure will go in what column. So everybody says that in table 4 sales will go, but when there is a difference, like a simple example if I would give, that the party which we reported was a B2B, he was a registered party at the time of filing GSTR returns, but GSTR 1 and 3. But by the end of the year, the registration got cancelled, and the party is now a B2C party. And unfortunately, it is a retrospective impact. So maybe, I don't know if we actually go back seeing to that or not, that whatever B2B transactions have been reported are actually B2B at the time of filing or not. But yes, if we are able to come across such transaction, then again the point is that whether we should reflect it in the B2B or B2C. that question comes up. So the point is that we are aware as of now that okay, this B2B column will include B2B related transactions, but only in such cases wherein the things have changed post our return filing. There the question comes up as to how it is to be reported, and that takes more time rather than the working that we are supposed to make. I hope all of us face that challenges every now and then. So it is compulsory to file all Form GSTR 1 and 3B before filing of GSTR 9. So if somebody has not complied for monthly returns till date, then first to file GSTR 9, we will have to file the monthly returns GSTR 1 and 3B for those clients. Now we go to the contents of the Form GSTR 9 and 9C. Okay, so do we have any questions till now? I mean, it was very basic that we have covered till now, but if you all have any questions, we can discuss it now, or I can move further with the contents of the forms. Okay, I'm moving forward with it. Yeah, so now GSTR Form 9 is bifurcated into various parts and then the tables. So the hierarchy is the form GSTR 9. It is divided into 6 parts and various number of tables. And in tables, there are sublines. Okay. So a summary has been provided as to what are the parts that is divided in GSTR, how GSTR 9 is divided in various parts. Yes. So first part is very basic. It includes the registration details, name of the person and all that things. We will discuss that in detail, or we will see that when we see the form. Okay. Yeah. And the details of outward and inward supplies are included in part 2. Then ITC related details are mapped in part 3. Tax paid in the returns filed is mapped in part 4. Now, I don't know how many of y'all can connect through these parts because it is just an overview. We will be getting into the depth of each of these parts sooner now in the coming slides. Yeah. And part 5 shows the details which are declared in the next financial year, but they are pertaining to the current financial year. And part 6 is relating to other information. Now, other information includes our HSN related summary. So summary, again, the part 9 form 9C is also divided into parts. It has 5 parts. It consists of basic details, the reconciliation of turnover declared in annual financial statements, and the turnover declared in the annual return GSTR 9 consists in part 2. Then reconciliation of taxes paid. Now this table includes rate-wise details. Again, this is an additional information because when we are filing our GSTR 1 and 3B, we are not used to giving rate-wise details, which we are supposed to give it here. So we are supposed to do it additionally. So now a lot of clients do ask us, "Okay, why are you all charging so much for 9? आप पूरे साल का compliance तो कर ही रहे हैं. You are filing R1, you are filing your 3B, that only you are supposed to report in 9. Then what is the need for additional uh, charges?" But then the implications of Form GSTR 9, maybe either they are not aware or they just don't want to consider those implications. Yeah, and a lot of details that we are supposed to put here are different. Like till earlier year, till financial year 22-23, we were supposed to reconcile it with GSTR 2A, wherein we were working for the whole year. All our returns had been filed in form GSTR 3B on the basis of GSTR 2B. We did reconciliations on the basis of GSTR 2B. But when we were supposed to file it in GSTR 9, we had to reconcile the whole data again with GSTR 2A. So all these things are in addition to what we have done while filing of 1 and 3B. Then reconciliation of input tax credit is also to be shown in annual return. And if there is any additional liability which arises due to the non-reconciliations, wherein I had given an example when we started that if my turnover is 6 crores and if I forget to declare 10 lakhs invoice, Then that additional liability, which is not reconciled. So my books would show 6 crores, 10 lakhs of the figure as a my taxable turnover, wherein it will here show as 6 crores only. So that 10 lakhs is probably shown in GSTR 9. And what comes in GSTR 9C then? What kind of reconciliation would come here is the one which we are not liable to pay tax on, or which is excluded from the purview of GSTR 99C, but is a part of our financial statements, would be reflected here in 9C. Okay, so what details we require to file, to prepare, or to be having with us? So I suppose all of us would have a checklist kind of a thing, right? When we start the work, we'll be given this checklist is to be uh, looked into, and details we have to ask from the clients, right? So what if we have to prepare a checklist for GSTR 9 and 9C? So this is not a checklist, so to say, but yeah, it includes the details as to what details we are required to be taking from the client in order to enable us to prepare the workings for GSTR 9 and 9C. So it includes our books of accounts. If books of accounts, and now we don't need a complete set of books of accounts with us, but it can be in the form of outward registers, inward registers, RCM details, then our advances related details. So all that details can form part of this books of accounts. So yeah, and then the audit reports. If there is audit being done, then we will require the audit reports, so that we can reconcile whether the turnovers that have been reflected in the books matches with the audit reports and matches with our returns, so to say. Then summary of all GSTR 1 filed. Now this is already available. The to compilation of it is already available on the portal, on the GSTR 9 tab. And majorly, most of you all would be downloading that as a reference. Similarly, 3B also we get it, and we get a pre-filled standard 9 also, that we get it from the portal, wherein on the basis of the 1 and 3B data, it gives us a pre-filled form. So that also we get it. And I suppose that also we take it as a base as to identify if there is any difference in our workings and what is being shown on the portal. Then we take out cash and credit ledgers also. So this is ideally for not just for annual returns, but I feel when we are doing audits also, we take this out even to close our books of accounts, because we at the end of it match it with our ledgers that we maintain in the books pertaining to GST. Then monthly summary of outward supplies and monthly summary of inward supplies. Now why is this required? So basically, it is required more because we would have to identify if there is any change or done post the returns have been filed. So after filing of 1 and 3B, if the our registered person or our client does not maintain a system of locking the books of accounts, and people can go back and change the entries at their will, then we will require monthly summaries to identify as to which month there is a change, and then again we go down further deeper to identify which transaction was changed. So that can be done through registers that we have taken from our clients. But monthly summaries would help us getting a detail as to where the changes have been made. Then inward supplies with classification of input services and capital goods. Now few softwares do give that details already. So on the basis of the entries itself, it gives us a bifurcation on once the ledgers are selected in a proper manner. So if the ledger creation or masters is done in a proper manner, then we can get these details from the software. So basically Tally gives that, Zoho Books gives that. But apart from that, other ERP softwares, I don't think they might be giving that. So we will have to ask them to give those details, or extract from the purchase register, and they would have to do it manually. Then we will require import of goods IGST paid, details of IGST paid on import of goods and import of services. Okay, so this is an additional register that we can ideally ask from the import related details. So it would cover everything, either paid also and RCM also. If it is being maintained separately, then we have to ask for separate details. Then RCM under section 9(3) and 9(4) of the CGST Act, or the RCM details, if we have to say. So whatever RCM taxes that we have paid, we have to see that if it is matching with our books or not, or so to say that whatever has been reflected in 2B, in certain small SME clients, they might match all the books of accounts, the 2B with the purchase register, but when it comes to RCM details, sometimes it happens that they don't pay only that amount. It is lying there. So 2B shows that this RCM is liable to be paid, but the client would have not paid that. So there can be such instances. And details of ITC eligible, ineligible, and reversed. Now this, if we are only doing the compliances, then we would have this working somewhere with us. So if we have done the monthly compliances for that particular client, then we would have this workings as in on a monthly basis, that this was the ITC which was eligible, which was claimed. This has been carried forward because for whatever reason the invoice was not available at that certain point in time, or we were yet to decide the whether we want to claim it or we want to reverse it. Ineligible ITC, and ITC reversed part I have already covered, and ineligible ITC, if anything is comes under blocked credit and we don't want to claim that credit, then this thing we would have the workings with us. Yeah. So what other things we would require is a reconciliation with books of accounts and 2A, 2B. So now I feel this is the basic thing that we are supposed to do, that we are supposed to match our 1, 3B books together. And if we go one step backwards, then it is also e-invoice, e-way bill, GSTR1, 3B, and books. So that is also there in the coming slide, that we will discuss that how the flow of outward supplies is. And we are also supposed to reconcile our 2A, 2B, and now there is no 2A in picture, so 2B, GSTR 2B, 3B, and our books of accounts. Because a lot of times the reconciliations, when we try to do reconciliation, what is reflected in 2B might have been claimed in 3B, but will not be reflected in books of accounts. So most probably we would have claimed the credit of it and we forgot to claim it in the book. If we forgot to book the entries in the books of accounts. Similarly, booked in books, but people did not file, the supplier did not file it in GSTR 3B, and we could not get it in our, in their GSTR 1. So we could not get it in our GSTR 2B, and we have not claimed the credit for it. So all such kind of reconciliations we will have to be having with us, and I think most of us are doing it on a monthly basis. If we are doing a compliance for that client, we would have this kind of a list ready with us on a monthly basis, and it will already be being followed up several times in the year. And if not, then we should try to do it. It should be a practice as to that we should be doing it on a monthly basis. We should not just rely on GSTR 2B figures. We just claim the credit on the basis of GSTR 2B. Don't change the figure. Nobody is going to come and ask you what is the difference, but that is not the case. When we get notices in future, people have been asking for the whole list of purchase register and when the credits have been claimed. Yeah. So, and then the details of taxes, interest and late fees, penalties, all that details we will require. So basically that is even auto populated. We just need to check it whether it is what we have actually paid, and we are sorted with that. And then the transactions, the spillover transactions. Now ITC reconciliation is one part, but the spillover transactions is again another set of entries, wherein we are still trying to, so it is like a reconciling ITC claimed in 3 different years: the earlier year, the coming year, and the year we are doing compliances for. So if these details have been maintained properly during the monthly compliances, then it helps us during our final annual returns as well. And these tables wherein we are supposed to report these entries have been made optional, but ideally we should be reporting this, because if we don't report it, it will become very difficult for us to in future to convince the GST officers that we have claimed this credit. They, what they see is how notices are issued. I am jumping off from the topic to discuss something which we practically face. So now, on the basis of ITC comparison summary, now all y'all are aware, right, that we get an ITC comparison summary from the portal. Yes, an annual ITC comparison summary, which is monthly breakup, which gives us a monthly breakup of what tax details have been shown in GSTR1, 3B, export related details, ITC related details, and what is the difference. So on that basis, the notices are issued. Yeah, yeah. Sorry for the interruption. We will continue with our presentation. Yeah, can we have all our attention here? I understand that since the topic is not your subject, so it will be little dry and little, you know, monotonous. But I will try and ask you. I will try and be more practical, take more practical things, so that when you all do it, you will at least try and recollect somewhere that we had heard it somewhere, or we had heard this earlier, and yeah, this was discussed, sort of a thing, so we can try and connect it there. Yeah. So yeah, now we have already covered this part. Just give me a moment. Yeah. Okay. So this details of advances taken for which no invoices was issued till the end of financial year. This is very important. Though, I mean, majority of us might even skip it. In fact, it goes unnoticed a lot of times. And we have heard that people have paid their taxes and they have forgotten to adjust it against the tax paid. So they end up paying the GST amount twice. Once while making the payments, and once when the actual invoice is raised. So if we forget this part, that we have already paid advance tax on advances, then there are chances that we end up paying taxes on advances twice. So then that can be a big hit, wherein there is a frequent advance coming, and this is in case of supply of services. In case of goods, there is no application of advances, there is no tax liability on advances. But in case of supply of services, it is applicable, and we have to be very cautious as to we get all the proper details that we are required, and the compliances or the way it has to be shown in our 1, in our 3B, and in our annual returns, they have been shown properly, or it can result into liabilities which are unforeseen, even for already paid earlier. Then LUT, and that's okay. Then register credit note and debit note registers issued. So now, few uh, uh, few period back, uh, the credit note and debit note were earlier when it started. So when we go back to when it started, we were supposed to link the credit note and debit notes issued to their mother invoice. Okay, but some time back they have removed this criteria. So now we are not supposed to correlate or not supposed to connect it to its mother invoice. But again, when we are supposed to give the answers to the officers, it becomes very difficult to answer. So if we follow the same practice, that credit notes when they are issued, they are already tagged to their original or mother invoice, then it becomes very easy for us to answer. So now if we are just, there is a shift of perception as well. If I say that, I like we discussed why 990 is important. So it is not just the form to do the compliance, but it is also the starting point for all the notices and further litigation and adjudications that would take place for that particular year. So this, if filed properly, can reduce a lot of notices and litigations or ASMT 10s. But if it is, if we, if the figures are not appropriately placed, or there is a difference and not explained properly, then definitely a lot of notices are going to be attracted. So if I would give you some example, when we were, when we used to go to audits at my time when I did my articleship, so we used to go to a client who was a shipping agent, and they used to, every year they used to get service tax notices. It was a fixed set. Matlab, that industry itself gets notices every time. Every year they are subject to certain notices, and there was a fixed pattern as to how the notices were issued. So in our office, it was a system that when we used to go for audits, we were actually supposed to be making at the end of audit all these details ready at that point in time itself, in terms of either income tax or even service tax for that matter, because when I did my articleship, it was service tax that was applicable. So similarly, I feel even for GST, when we are doing our stat audits, if we are supposed to do the same client's GST audit as well, then some of our data should be prepared at that point itself, so that if we want to give any impact in our books of accounts, it is already dealt with. And then we are not in a situation or a limbo wherein we are seeing that, okay, now this was supposed to be amended in the books and the books are signed, it's audited, it's signed, it freezed, you cannot do anything, sort of. So that kind of a practice would really help. And again, for preparing 9 and 9C, if we are thinking that we are doing this not just to comply because it is mandatory for us, because we are crossing the turnover, but because we are doing this exercise so that we are able to reply or give a proper answer when we are getting notices from the department. And this reconciliations, we have covered all the points from this slide. Now there are certain relaxations in details that we are supposed to put in GSTR 999C. So not everything in every detail in the form is compulsory to be filled. There are certain relaxations. So over a period of time, it has changed. Earlier, the relaxations were little more in comparison to now, and day by day, it is reducing with the way the things are being streamlined at the return filing levels. So the way they are trying to streamline, though it is not yet streamlined yet, every 6 months, the whole process of filing GSTR 9 and 9C maybe changes. Not 6 months, I mean, that is just a number, but yeah, every now and then it keeps changing. But there are certain tables which are not supposed to be reported. It is not compulsory. But again, reporting it would help us in future, then we should definitely report that table, though it is not compulsory. So this is just a detailed, I mean, just a brief list of details as to which tables are not required to be filed. So the credit note, debit note, and amendment of exempted nil rated details are optional. Then bifurcation of input and input services is still not required. We can still club them and show it. Now, this all things might go over the head, I can understand, but when we see it with the tables live, it might make more sense. Then the reversals can be reported in a consolidated manner. So we can just mention at one space that total reversals made during the year, and that's it. We don't have to give the breakups. That also we will cover. And there are few certain tables which are made optional. As I said, 12 and 13, it is the one with the details of the previous year or the carry forward figures. Yeah. So now similarly, there is a relaxation in form GSTR 9 and 9C. Again, it will make more sense when we discuss the forms. So I will just keep this slide, just go through the list and we'll move ahead and we'll discuss these things with the form itself. And if we want, we will again come back to see the whole list again. Okay. So now the flow that I was discussing, that how does it start? So it ideally starts with the uh, e-invoice or e-way bill generation. Then GSTR1 is to be filed. Then we reconcile it with 2B. So again, with the new system coming in, one more tab would be inserted here, is IMS. But because this is pertaining to 23-24, this is the thing that we had done. Yeah. And then we are filing from GSTR 3B and then 9 and 9C. Okay. So what are the steps that are adopted in filing outward supplies details in the annual return? Okay, so here after this slide, I will jump to the forms because I want to show it to you how actually things are reported in the actual form. So just to give an overview that the registers are taken, then we compare it with the 3B returns, then the figures are matched, and where these it is reflected in the tables, I think we should see it in the form itself. Okay. So just give me a moment. I will open GSTR 9 form. Yeah. So is my form GSTR 9 visible? Is it visible? Yeah. Okay. So part 1 that we discussed consists of these line items, basic details. The one which I have highlighted here is the basic details that consist of part 1 in the table. So that is very basic. It includes financial year, GST number, legal name and trade name. It can be different in case of proprietors. Their legal name and trade name are different, so that it can be different. For example, my name is Mansi Nagda. That is my legal name. And since my firm is a proprietorship firm, Mansi Nagda and Co. will be my trade name. So that's my firm's name. Then we discuss this outward supplies related table, table 4. It includes, now we have specified the details here as to what is mandatory and what is optional. The line items that we could see, which did not make much sense to us because it was just a number saying table 12 is not compulsory. So we have included it here as well. And it is a good practice, so to say, so that we don't forget anything which is mandatory and we are aware also as to what are the optional tables. So we put it here itself besides the table line items so that we are aware as to what is mandatory and what is optional. And yeah, so table 4, the whole table is mandatory, as you can see, and it includes outward related supplies on which tax is payable. Okay. It would include the breakup of B2B supplies, B2C supplies, export with payment of tax, then reverse charge on which we are inward supplies through reverse charge for which we have paid the taxes, e-commerce. So this column has been inserted in this year itself. It was not earlier. It was not available earlier. So this is in lines with the new tables that was inserted in GSTR 1 in relation to e-commerce operators. So there were two new tables inserted in GSTR 1 in this year, and out of that, this table will be filled in. So the details come from there. So in order to be in sync with what was done in GSTR 1, even GSTR 9 has been amended here. Okay, then we give details of debit note and credit notes and supplies declared through amendments. So there are certain instances wherein during the year also we would have made certain amendments. It is not just at the end of the year, or when I was doing the return for the month of April, most probably I would have forgotten something. Then I would have tried to claim it in the month of May, or I would have amended. For example, when your client filed the return, they did not have the GST number of that particular party. But in May, it was provided and it was amended to from B2C to B2B. So here, few of those amendments will be declared in this table, KLN. Yeah. And then comes a subtotal. Now, there are few questions that we have listed down that we would like to discuss. Few instances and few issues relating to these tables. Now, it is very simple so as to say that, okay, B2B supplies will be reflected here in this column, B2C supplies will be reflected there. But what if my client shifted from B2B to B2C, as I had discussed this instance earlier, that if certain client was earlier falling in B2B and was rightly filed at that point in time and has the registration has been cancelled retrospectively, then ideally the ideal scenario would be to reflect what is correct at the time of filing of GSTR 9, so that we are giving a true picture when we are filing GSTR 9. Though it would deviate with what was filed in GSTR 1, but at that point in time, we will be providing a correct picture. Now, these deemed exports, a majority of us, deem exports, or there is one column deemed supplies as well. Okay, so that figures, where does that figure come from? Now, we are also supposed to take into consideration deemed supplies, which is nowhere written here. It is nowhere mentioned. It is hidden. Just say when we used to do trial balance and postings during our BCom, there used to be certain hidden transactions which were assumed to be done, which were never told to us, but we were taught at that point in time that you have to consider these transactions. Similarly, there are deemed supplies which might be, which might supposed to be taken, which might not be discussed or which is not upfront from the returns. So what could be just give me a moment, I have that list of transactions which are deemed supplies. So there are certain transactions which are deemed to be supply. What would that include? The classic example would be the goods provided to job worker without payment of tax under delivery challan. That would be a classic example for it. If the duration of 1 year has passed and the goods have not returned back to us, then it is assumed to be a deemed supply, which has to be reported, taxes to be paid, and it to be included in all our returns. So now maybe we would have missed during filing of our GSTR 1 and even 3B. But if still something has been left out, it can be included here. The liability can be paid through DRC 03. But we can do it only if we are aware. If we are not aware, then again it is gone and we cannot revise GSTR 9 and 9C forms as we are aware. Yeah. So there are many such examples, but this is, I would move ahead with this example. Yeah. And then the table 5 reflects outward supplies on which tax is not payable. So now what is included is in this table. It includes zero rated exports that we make without payment of taxes under LUT, certain exempt nil rated supplies. Then it includes the SEZ related exports. So all that details are mentioned here in this table. Now, recently one of the notices that we came across was pertaining to this. Our client, if I'm trying to explain a practical concept here so that we are just not discussing the line items. In that client's case, they have been using both. They have certain exports were made through LUT, and certain exports were done through without with payment of taxes. So both kind of transactions with and without payment of tax, exports relating to exports, is what we are discussing here. So both set of transactions were there. Now, during filing of GSTR 9C, inadvertently, certain transactions without payment of tax, which should have been reported in table 5 in an ideal scenario, had been reported in table 4 of the form. And when we see GSTR 9C, which I will open even now, in just next few minutes, to show this impact there as well, that how outward supplies details are reflected in GSTR 9C simultaneously. So in that case, what happened was, when the rate wise details were provided, which that figure did not match with the figures of the taxable value shown here. The taxable supply is shown here, taxable turnover. So notice was issued relating to this. Now, we could explain it to the officer, but again, we had to go back to the whole year's data and identify why. Because for officers, it is very easy to say that, see, your total turnover of 6 CR here doesn't match with the breakup of say 7 CR here. They just see the differences. But when if the case would have been properly presented here, there would have been no difference. And unfortunately, 9C doesn't give us a total, but obviously we try to get the total, but still it was not taken into consideration while filing of 9 and 9C, and it resulted into getting off notice. And then we were supposed to explain it, and ideally the notice clearly mentioned that this is the liability, pay it off, sort of. So the implications are far beyond what we are thinking, because whatever figure we are putting here has certain impact on our liabilities. So I hope I am able to explain you the importance of it. Yeah. Then we move to table 6 of ITC. So now this is ITC availed for that particular financial year. Okay, it includes table 6A reflects the ITC that is reflected in GSTR 3B. Now the biggest concern here is it is taking it from table 4A, which is the gross amount. So there had been a change in the way since 22-23 in preparation of GSTR 3B. So details that we were showing earlier as net, we used to always put all other ITC. If you all have filed any of the GSTR 3B forms, you all would be aware that all the ITC that we claim goes through used to go through the details, all other ITC. And if there is reverse charge or something, whatever other specified details, then it is okay, or else all other ITC. Now, in between 20 to 23, there was a guidance saying that we are supposed to show that figure as it is. It has to be the one that was auto reported, and whatever changes has to be done in the form of reversals. Okay, so here the figure that this table is taking is from the gross figure, if you all can correlate it to form GSTR 3B. Now what happens is that this gross figure is taking certain figures twice, because at that point in time, when in month of April, rupees 100 which was shown, on which we did a reversal of rupees 10 is also being reflected as 100 year, and in the month of say May or June, when we increase their ITC to include that figure of 10 which we had reversed earlier, is also being added to that. So for example, in the month of June, the ITC available was 200, but I claimed additional 10 rupees credit which I reversed earlier under temporary reversal option to claim the credit in the month of June. So that 210 plus 100. So it is showing that 10 rupees figure twice in the 6A table. So now this is a practical difficulty. We all are facing it. And the best solution is we give the breakups as properly, so as to be that we don't get a difference here in table 6J, because the guidance note clearly specifies that if there is any difference in 6J and it amounts to additional, if that figure shows that it is an additional ITC claimed, then they can issue notices to us for the reversal of that figure, saying that excess ITC has been claimed. So the best suggestion is to give the details. So this figure directly comes from the 3B that we have filed. 6B gives us a breakup of inputs, input capital goods and capital input of services. Now this bifurcation for input services, input and input services can be clubbed together still, but capital goods has to be shown separately. Okay, and this total should ideally match with Form GSTR 3B. Now, one set of question is that 10 rupees of credit which was reversed did not pertain to me, and I have not. See, there are two kind of reversals. If you all are aware, there are two kind of reversals. One is temporary reversal and one is permanent reversal. Now this gross figure includes both the reversals. Now that doesn't pertain to me in certain cases, and I have not claimed the credit of it, but still I am forced to give a breakup of those details here, so that there is it does not result into a difference in the table below. I hope I'm making some sense. I mean, to whoever has done it practically would be facing such issues or such questions when they are working on it. Yeah. And then it includes, details of the from reverse charge, registered and unregistered, ITC from on reverse charge that we are claiming, and import of goods details are mentioned here, that the details that we have paid, ITC paid on import of goods and ITC paid on import of services. Okay, it also gives a breakup of input tax credit received from ISD. Then this table don't have much relevance now, because trans 1 and trans 2, tran 1 tran 2 has already, I mean that phase has already passed. Okay, now this is a miscellaneous table, mostly our most favorite table. Whenever there is a difference and we feel okay, I am done with all the matching and still there is a difference, we are very much tempted to take it here and leave it, so that there is no difference. It is like putting when we are trying to balance our balance sheet and it doesn't match, all of us would probably have one particular ledger or one particular head, like miscellaneous one, wherein we just like to park our expense, I mean park that figure and try to forcefully balance the details. Similarly is the table, but again, or however lucrative it would seem for us to put the details here, it is always better to reconcile it now, or else we would have to do the same exercise when we get a notice, or during the audit processes. Okay, and then table 7. Now presently this bifurcation is not required to be given, and we can report all the details in other reversals itself and move forward with it. So there is no requirement of giving bifurcation of the details. So that the reversals that we discussed, that the above figure was gross figure, and there are reversals which are not being reflected or which are not part of GSTR 3B figures. So that impact is taken here, and the difference that arises, the net ITC utilization, if you can see 7J, table 7J, this figure should ideally match with your annual GSTR 3B with the figure net ITC utilized. So if all things are said and done properly, then this figure will match with the figure there in 3B, and it is a checkpoint for you all that yes, the ITC that is utilized in annual return matches with my uh, total of all months 3B, consolidated 3B. Then table 8, it reflects the reconciliation with GSTR 2B. 8A is auto-populated, and we are supposed to mention the details here. It reflects ITC on inward supplies received during the financial year but availed in the next financial year. So this is what we have claimed in 24-25 till 30th November is to be reported here. And if you can see, it is not mandatory, but again it is important, because when you are if you know, it becomes very difficult to explain the spillover effect of the ITCs not claimed in the current year and taken in the next year. So this table helps us, and the working done behind it helps us to prove that details. And the other details are ITC available but not availed, the ones which we have already reversed, ineligible ITCs, and then we arrive at the difference, and it also shows ideally there, I mean, after all these things, ideally there should be no difference. And it will show us the total ITC that is lapsed, the one which we could have been claiming, but due to certain reasons it has been missed out or we have not claimed it. Then table 9 shows us the taxes paid. Now if we can see the from the columns D to H, these are auto filled, we don't fill it from our end in table GSTR 9, and only details that we fill is tax payable. Now ideally this table should be coming from the details mentioned here in table 5, टेबल 5 नहीं, टेबल 4 एन का जो डिटेल है टैक्सेस पेड का, दैट फिगर शुड मैच, this liability should match with the figures that you are mentioning here. So again this acts as a checkpoint that whether these totals are matching with my individual amounts or not. So the C column should be, the formula is the column C, total of column C should be equal to D, E, F, I mean this whole D, E, F, G and H if there is any cess, then this, the summation of these columns D to H should match with the one in C, and that should be matching with your 4N, table 4N. So again we, you know, in a rush to see to we see each table, but then again the correlation of it to the figure we have already reported somewhere else is very important, or else we are again going to, you know, get differences at various places. Then these are the details which have been updated through amendments. Now outward supplies amendments that we has been done in next year. So this whole table or this part includes only details which are pertaining to current year but have not been taken into consideration in current year. So it has to be coming from the workings of the 24-25 ideally. And this is a breakup of the details that we have, taxes that we have paid. Okay, so that is also after addition of the figures in 10 and 11 above, we get the total of the figures. Okay, and now if we see the other tables, 15, this is optional. It is not mandatory. Refund related details are not mandatory. Demands and refunds, so we would not discuss it much in length. This composition table is also not mandatory. HSN-wise summary for outward supplies is mandatory. And this, to get this data at various places again is a task, because a lot of times when it is in, even in GST or monthly reports that are going, might not have a correct picture of the same. So these details should again match with the outward supplies and the tax liability figures that we have had. Okay, and inward HSN summary for inward details, inward supplies is optional. It is not mandatory for us to do. So with this, we have discussed GSTR 9 form. I will quickly run you through GSTR 9C form, and I will take a few pain points that we have. Okay. Okay. So this is table 99C. 9C, I'm sorry. Yeah. The form GSTR 9C. Now, a lot of details here are optional, as you can see. So it does not, I mean, majority of the things that are to be included here is your turnover, that comes from the audited financial statements. And if there is any reversal that you want to show, or there is any difference that you want to reconcile, then this table is relevant. Or else if it is directly matching with GSTR 9, then there is no need of any differences that has to be reconciled. So again, if there is any difference, it should be shown, declared in the proper table properly, and match with GSTR 9 figure. So again, this should ideally be done at the finalization of audit, so that the figures matches with the 9 when we are preparing 9. So this exercise, ideally, though it is the end, but ideally it should be done when we are finalizing our audits for that particular year. If there is any unreconciled item, then there is an option to disclose as to what is the difference. So there are certain very relevant items here that can be declared, like exempted details, non-GST nil rated transactions, zero rated transactions, so and so forth, that it forms part of your annual turnover, but does not include the taxable turnover. Then this rate wise difference that I was talking of. So the officer, in my example, in the case that I discussed with you all, in our case, this taxable value figure did not match with the details given in 9 in the table 4. Table 4 N total, and the notice was issued saying that this is your liability and we are supposed to pay it. And we tried and explained and it got sorted. But yeah, it invites the notices. Then if there is unreconciled details, then we have to explain with the rate wise details as to why it is unreconciled. Reconciliation relating to ITC. Now, if you can see, we have tried to correlate here as to which part of GSTR 9 would reflect this figure. So, ITC claimed in the annual return GSTR 9 comes from the figures 7J. भाई कोई सोते सोते गिरा नहीं ना तब है ना बराबर. हाँ. So ITC claimed an annual return of GSTR 9. So it comes from table 7J here. Yeah. And if we see what is reflected here, what details we have to fill in here is the details of the ITC availed in annual uh, financial statements. Now the problem here is, which I feel, I don't know if you all have come across, is that when it is ITC, relating to ITC, it is, we only see ICNF, and even GSTR form, GSTR 3B has only that kind of a table. It doesn't include taxable value anywhere. The problem arises when we have to get these figures here, then we have to actually go searching for the taxable value details. So at that point in time, we have to realize that when we are doing monthly returns, though it is not mandatory in Form GST or 3B, the taxable value figure should be there in our workings so that it can be accumulated here for the annual reporting. If there are any differences, then we have to reconcile it here, saying that these were the kind of details which also is, gives a very relevant kind of list. It includes salary, conveyance, bank charges, and all that, on which the ITC would not have been there, and thus there is a difference here with respect to the total amount. Okay. Now this also gives a detail for if there is any additional liability that is to be paid, then we have to report it in the last column. Okay, now this form, it everywhere says auditor's recommendation. So earlier than when this form was introduced, it was supposed to be signed by auditors, and some may think of it as a boon, and some may think of it as a curse that और एक audit चला गया, and some people like us would think, हाश, at least मुझे ये तो sign नहीं करना पड़ेगा. So mixed feelings for that matter, but earlier it was supposed to be signed. I suppose for first 2 years it was, the auditors had, I mean, chartered accountants were signing this form, and then they completely scrapped the audit part. The annual statement still stays, but it is on the self-assessment basis. The person himself, the owner himself, is responsible, and we are not responsible, though we are, but not on the signing part. Yeah. Now, I would just go back to the PPT. Yeah, so we have run through the forms GSTR 9 and 9C, and I think these tables and these details will make more sense as to how it is to be made now. Yeah, and then just give me a moment. Huh. Okay, so few things I want to discuss. This went very undiscussed when I discussed the form GSTR 9 and 9C, because it is just a one line item there, which has a very, I mean, big impact, or you can say the working behind it takes a lot of time. The credit notes and the debit notes. Now, it can be through because of various reasons, as mentioned in the column or the table, first table that we see here, that it can be because of rate or value or goods returns, certain deficiencies, or uh, you know uh, for various reasons that people issue credit notes. But there is one circular in 2024 which says that for every reversal of the credit note, there has to be a corresponding debit note, and the CA has to certify that the person has reversed the GST amount. So now this is unsaid. It does not get reported anywhere. But if we are not seeing it now, then when do we plan to see these details? So ideally, though it doesn't form part of the form, but it should form part when we of our checkpoints that we prepare. Because again, when we are collecting data now, it will help us. नहीं तो client आके यही बोलेगा, आपने तो तभी मेरे पास से सारा डेटा लिया था, मैंने आपको सब दिया था. Now why are you asking for these details? And again, after 2 3 years, nobody is going to be, how we will get hold of that supplier and his CA, so to say. So then that can only happen when you are doing, the whole year's working. And we have to also see that if the credit notes have been issued for that particular year in that particular timeline or not. And with the removal of the original invoice, this is ideally not, it does not get actually reflected on the portal that this was pertaining to so and so period. So again, to prove it that no, it was pertaining to that period and has been claimed before 30th November, is the onus lies on us. Okay, and there are documents. As I said, there should be a tagging with the original invoice. Yeah. Then how do we report the credit notes? We have tried to explain it here and which table it goes and how it is to be displayed in the GSTR 9. So if it is reflected in the same year, then it goes in the main table 4. If it is considered in the next year, if the credit note is issued in the next year, then it goes in table 11. And if it is, if the credit note is pertaining to, it is not pertaining to 23-24, then it is not reflected here as any which ways, then it goes in the next year itself. Yeah. Then relating to ITC, few points, just a brush up, that it is based only on the basis of matching with respect to GSTR 2B. And as we discussed, there are two types of reversals, permanent and temporary. So majority of these points has been just, has been already discussed when we were discussing the form, but still just going through as a quick revision sort of a thing. Then whenever we are reclaiming, then is it properly reported while filing of GSTR 3B, of which the impact will come in GSTR 9. Then cumulative tracking of reclaim. So there is a ledger. Now the questions that officers are asking is, तुम्हारे reclaim ledger में इतना balance क्यों पड़ा है? Now there can be chances that we have not reclaimed the ledger, or some people were not aware that the permanent reversal figures were supposed to be reflected separately and temporary reversal figures were to be reported separately, and everything has been shown in one figure in GSTR 3B, and there is a balance. So in an ideal scenario, this reversal ledger should ideally have been emptied by 30th November. But I am sure neither one of us, including me, would have emptied for any of our clients. We have never, zeroized this ledger. And the reconciliation, I don't know if we are asked to do it, how we are going to do it. But again, the balance lies. But ideally, there should be no balance as such. Okay, so this we have already discussed. It was in the form of, that we have just reflected it here in the PPT, but we have already discussed this points when we discussed the form. I'm just keeping it here for a minute for you all to go through the points. Then we shift to the another slide. And if you feel that any of this point has not been discussed, then we can reconsider that point again. Okay, there was one more slide. Yeah, cross tally between GSTR 9 and 9C. So there is a table that we have mentioned here as to which part of GSTR 9 goes where in GSTR 9 and 9C. So this can, while discussing orally, it is little difficult to, track it line item wise. So this can act as a reference when you all do the actual workings. And one part that we have missed here is, what if we fail to file GSTR 9 and 9C? So as discussed, there are penalties. There's late fee, there's penalty. And apart from that, we also discussed the possibilities of the notices that we would get if we are not reporting it properly. So ideally, as I said, there has to be a shift in the way we approach the form. It has to be not just that we are complying with something or this is just a compliance. It is an entry to the litigation. Yeah, so that understanding, that shift of perspective would really help when you all are actually preparing your GST and 999Cs. Yeah, thank you. I am done with my presentation for the day. So is there any questions that I have opened that? Okay, so somebody has said that please explain what is entity wise. And there are two answers also. Okay, so the decision is 100% English. Oh, I think it was 100% English only. ITC RICO could be carried out through GSR to be. Okay, so this you have already answered, right? So entity wise is, I would again revisit that concept. So entity wise means that if we are having one company, say Reliance Industries, the reclaimed. Okay, so first I will answer this question and then I'll try to go to other questions. Yeah. So if we say Reliance Industries, it would have various business sectors, or it has a multi. It has its presence all over the countries. And in GST, there is a requirement that if your place of business is there in any of the states, then you are required to take state-wise registrations. And there is no there is no stopping also, that you cannot take a registration for same state, two separate registrations. It can be even uh, the product, or that ways. So that is what the entity wise I meant by entity wise. And should we show the reclaimed ITC in 6H of GSTR 9? Okay, just let me go through GSTR. I mean, open the form GSTR 9 for my reference. Okay, so this maybe it went without discussing this table 6H. So this is okay. I'll just share it for the reference. Yeah, so the amount of ITC claimed under the provisions of the Act. So this majorly includes the one which are more than 180 days. So there is a criteria in GST wherein it says that if the supplier is not paid in 180 days, then we are supposed to reverse that credit. So whatever reversals we have made earlier, and we are reclaiming it now, so there is no time limit of 30th date of 30th 11 does not apply to such transactions. It is on the basis when you all pay, you get the credit for it. So this column depicts that figure, whatever we have reversed earlier, and it is pertaining to 180 days, then that credit when we reclaim has to be reported here. Yeah. Is there any other question? Okay, so what is the treatment of ITC taken off bill of previous year 22 that is reflected in 23-24 to be and claimed now? Okay, so I will show that as well. Here in table 13, it is reflected that the figure that we are talking about, that of 20 to 23, we have claimed in the current year. Then we are supposed to present it here in this column. Okay. We tally the difference in the reclaimed ITC made for temporary receivers. So that portion is showing the difference in table 8. Okay, so Raja sir, it won't show the difference because the amount that we are reversing would nullify that effect. So the gross amount that is shown in the table 6, after the reversals made in table 7, the net amount in table 8 wouldn't show the difference if it is presented in the right way. Yeah, so with this, I end my presentation for today.